All right, we back once again. All right, so my GEX forecasting videos aren't exactly a hit, so I'm probably going to get away from those a little bit. I wanted to go over just a really cool tool. This is how my channel got started, was going over cool things for trading that I thought were cool, that I came across, and I would just put them up on as a video. Anyways, this is pretty cool. This Tradytics is really like a fine-tuned version of Unusual Whales. Unusual Whales, I still use it a lot. It has a lot of really good information and stuff. But as I use Unusual Whales, I'm coming across situations where I'm having to do a lot of my analysis manually. Whereas Tradytics, they just kind of put it on there on one screen. And so we're on the options screen here for SPY. So that's something I analyze every single day. I always come up with a market plan. It's always on Twitter if you want to look at it. It's been working pretty well lately. So anyways, what I like to look at is what happened over the day. My favorite time of the day is actually after the market closes, when I get to analyze what happened during the day and then come up with my plan. And so anyways, this kind of puts everything together. They've got this algo flow here at the top, and there's probably people out there that use Tradytics, but if you don't, it's like $50 a month, I think, and it comes with just an insane amount of tools that you can use. Any kind of trader can use it. My main thing is options, so that's why I kind of like it for is for the options side of it. But anyway, so you look at this algo tool. So today's price action, obviously we traded up, and then sold. So I was pretty bearish most of the day just because I was kind of annoyed with the market. Every time I tried to go up, it would get sold off. So I ended up just buying a put and just leaving for the day. Luckily that was a great idea. So, but I wasn't really using this at all at the time. And then I come back at the end of the day and I look at this and I go, okay, wow. So middle of the day here, around 1 o'clock or so, the flow got really bullish, even though the market was selling off. So that's interesting to me. All right, so that's something I'll keep a note of. Then you've got the daily premiums heat map and the weekly. So this is really nice to be able to see the strikes and expiries. And you can see where the premiums are. The premiums in the market are extremely important, knowing where the bullish and bearish premiums are. So looking at this, I'm kind of just analyzing it here. 429, we had minus 6.5 mil, but we also had about 11 mil up here at 457, but that's further out. Say you're a day trader, we're just kind of looking for the next two expiries. So we got 440 kind of showing up with a bunch of bullish premium. I don't really see a ton of bearish premium for the next two strikes. This is OPEX coming up, and I'm not going to try and get into what I think the market's about to do. I'm just kind of noting observations. So we're OPEX and we're slightly bullish, at least as far as premiums go. Now, weekly wise, same kind of thing. We're really only caring about so this is going to be our total weekly for these strikes. We're really only caring about these next two expiries. You can start looking into next week, which would be here. But I'm just kind of looking at here. I'm seeing the 450 showing up here with almost 10 mil. That's coupled with the 457. I don't see a ton of bearish action. Anyways, you can see yesterday 411 was bearish, and then today we sold off. We're actually more bullish now for the next couple expiries. So that's interesting to note. That will go into play into my market plan. Then you got the historical net premiums. That's coming into today. So we actually have a net premium that is actually growing, which is interesting. You'll look at a bunch of different stocks and you'll see a lot of them coming down, most of them sideways. This one's actually coming up. That is from that March 31st, which happens to be, let me go get it for you here real quick. March 31st was the end of quarter, so something on SPY, this is just the chart I use, end of quarter would have been right here, right where this line is. So end of quarter, we've been basically straight down, but the algo, the net premiums has been increasing, so that is also interesting to note. Yet price is still going down, so price leads everything. So I'm not gonna start buying calls here just because I see this. It's just gonna be part of the weight of the evidence. Okay, so then the next thing is net flow. So this is gonna be the day's net flow. We can see middle of the day, so that kind of coincides with this. That's probably where they get that algo flow. But anyways, you have some positive divergence there, which kind of lifted SPY there at the end of the day. And then you had a lot of, you have negative movement on the put side. So as far as the premiums go, so you had a little bit of an alligator look here in the day. So that's another interesting thing that'll go into, kind of my anticipation for what's going to happen tomorrow. As of right now, it sort of looks like a bullish setup, if not just a sideways setup. Looks more like bullish. Then you got the call versus put premium. Okay, I don't really, this right here as far as SPY goes, you'll see this a lot where the put volume is just so much higher than call. So this is sort of just a SPY thing. Most of the time, if you see other stocks and it's like this, then you'd be pretty bearish. But the volume's not so much important as the premiums. So I would definitely put the premiums over volume as an order of importance. And then call and put OI. Now this is interesting. So much put OI that it's sort of telling me it's a setup like where last OPEX happened. So last OPEX was right here. Boom. Look at that. So last OPEX would have been, was it March 18th? I can't remember which day it was. This was one of these days. Anyways, last OPEX essentially was, I think it was right here. It was just basically straight up for almost 40 points on SPY. And it was a similar setup to this where we had so much put OI that comes off the book. So I'm not saying it's going to happen. I'm just saying it's just something to note. This right here is super cool. Matrix stock expectations by market makers. And so you got to read into this a little bit. They've got a little guide here that'll teach you how to use it. But essentially this is going to be using premiums to give you an anticipation of what is going to happen next. It's supposed to be sort of a long-term or swing trade type tool once you read the guide. But I think it's really cool to use premiums, and you put these little bands here. You have the red band and the green band. Essentially, the strategy is to be long when you're above the green band, basically neutral or don't be in it when it's in between the bands, and then bearish when it's below. So you can back test it or do whatever you want. But I think it's cool that they use premiums to generate this indicator. And this indicator, they say, is how they have an AI portfolio. This is how the AI portfolio is using this indicator right here. So that's really cool too. I like that. I just love how clean everything is and how it's all on one page. Then you get the volume and OI heat maps. I love the OI heat map. Extremely important for me. I'll be looking at this in the morning once it updates. If you don't know open interest, extremely important to determining where the market might go next. So that updates at around 6 or 6:30 Central Time in the morning. I don't know which one it is. I usually check it at like 7:30. Come and get the new OI updates and see where the market's likely to be headed based on what people were buying today and what they held overnight is kind of the way I look at it. So next is the volume. You also have the volume heat map as well. So you can see it by strike. You can see it by strike, and you can see it by expiry. Where the volume is. Now remember, the volume is on contracts, to me, less important than premiums or OI. So like if you put them in order of importance, OI is most important, open interest, premiums, and then volume. Now you can ask why I think that. I don't really know. It's just the way I operate. So I think the open interest is more important because that's what's going to generate the gamma exposure. So anyways, next, open interest by strikes. So this is something I've been looking at for a long time, is how much open interest there is per strike. Again, this is why it's so nice, is that this page has everything I look at all in one nice clean page for me. So this is the stuff I bounce around in unusual whales to get this information, and Tradytics has it all on one page. So you could basically come in and look at SPY every day with this one page and sort of kind of know what the day was like, or what the day's going to do next, or what tomorrow's going to be like. So open interest, lots of open interest. So that's where we get like this sort of look here, where you just got so much put OI. That's what this looks like. That's what's happening there. So then you can also filter it by expiration date. So we could come in here tomorrow and see what the OI looks like for tomorrow. And it looks like there's just a ton of OI on the 390s. Those are not going to get paid tomorrow, pretty sure. What about on the 14th? So here's the 14th. Okay, so you can see how that changes. So We can see tons of OI expiring here soon. That just tells me right now that they're not going to let the market is probably going to gamma squeeze to the upside. It's just what I think. That's just what I think by looking at all this. And I don't want that to happen. I want the market to crater because I'm just a perma bear. But the evidence says otherwise. Flow density. So this is going to be the view of money being spent on different strikes and calls. X-axis where strikes are the strikes, while y-axis is the net premiums being bought. Green line above 0 is bullish, while red line below 0 is bullish, essentially meaning selling of puts compared to buying. So this would be bullish on this strike, bullish on this strike, bearish here, bullish, bearish, or bullish here. So bullish, 440. My plan here is essentially this 440 area is probably going to be extremely important. But you can see some bullishness there, some bearishness there. They were buying puts today. So this is just an aggregate of what happened today. It doesn't mean it's not what stuff that they didn't buy. But IV rank, I haven't really figured out how I want to use this yet. I've been noticing a lot of this area here. Sort of the IVs really dropped during that summertime area, which kind of tends to suggest that it's going to be a sell in May, go away type of scenario for summer. Hopefully not. Hopefully we get some kind of crazy volatility because most of the charts will look like this if you're looking at a bunch of stocks and stuff where the IV sort of drops off here into a canyon for most stocks. Now my friend thought they were selling more strikes, but I just thought about how it's just during the summer. So summertime obviously is really low volatility. Gamma exposure. So this is another reason why I think there could be a squeeze to the upside is because of this gamma exposure. I'm not going to go into it too much, but that's what I like about this. Again, this page has everything on it. Now we see our gamma exposure here. Learn more about GEX in some of my other videos. Max Pain strikes. Very interesting to see Max Pain at 550 going out to June. Why is it so high in June and so high in December? Are we going to see SPY 550 this? SPY 500 would be sweet for this year. And we know it's possible. It happened in 2020. So very, very possible that something like that could happen. Let's see, next. I haven't really figured out how to use these, but you got some unusual contracts type of graph here, largest orders graph. I'm sure there's some use in there. I don't really know what. And then you got the top calls and put contracts. And you can see that kind of play out. Now this is really cool, the whale positioning timeline. This right here takes all the different strikes, color codes them, and then graphs them based on whale positioning. I'm not sure where they're getting the, how they're determining who's a whale and whatnot. But I still think it's cool. I just learned about it, so I haven't been really using it yet. But if you take tomorrow, just, because all we care about is tomorrow if you're a day trader anyways, we can see the 440 whale positioning went up. And then you can also see the 438 whale positioning went up and 437. So now this, probably because today was kind of a bearish day, that explains why there's whale positioning to those sides there for tomorrow, which just means I think in my opinion they were just hedging. So then we look into Thursday and we see that 440 again at the top, and then 455 being at the next positioning. So again, telling me that there is a slight chance that we see a ripper into Thursday. Given the positioning of the market right now. Anyways, hope you guys like this. If you do, like, subscribe, and hope you like these videos better than the GEX forecasting ones. But definitely go check out Tradytics. I don't have a referral or anything like that. I just think it's a cool tool. And we'll see you next time. Peace.